The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. Happy Friday. We kick things off this morning pretty much where we left off towards the end of yesterday. Negative prices in the market by about 2, 3 in the morning. We've just been shopping around where we were. Really, you take a look at it, by almost midnight, you were trading at about 4,080 in the S&Ps. We dipped just below 4,070. Right now, we're trading down 21 points in the S&Ps, folks. That's off about 0.5%, trading at 4,078. NASDAQ 100, we're off by 89 points, make it 90. That's about 0.75% in the red right now, and you see the volatility. Same thing. By about midnight, this market was lower, man. You accelerate at 6 o'clock when the futures open back up. The Dow off 113 points right now. You have the Russell off by 9. Crude, check out the action in crude. From 79 to 75 right now. You take a look at the daily on crude. Seems like we might have bumped up against a little bit of a resistance area towards the 80 to 82.50 area. Crude dropping out of the sky right now as it's off $3. Pretty dramatic move to the downside. Hadn't seen that since about February 3rd. A couple of weeks since we've seen that dramatic of a drop in the price of crude. We've seen the upside from about 70 to 80. Nonetheless, gold contract. Look at that pullback, man. Gold, 1837. Great time to sign up for some of the weekly newsletters, folks. They come out on Monday. The Gold Report's one of them. Please check it out. My dad's. I'm a little biased, but check out the gold action, man. You take a look at where we are in gold. You take a look at the Fibonacci basis, where are we? Sitting right at the 382. Pretty interesting. Doesn't mean it's going to hold. It is an area, though, that potentially you could look for a little bit of resistance. You're also chopping into an area in gold. Right now, an area of prior resistance, maybe turning into a little bit of support area at 1837. We'll see. Or what does it do? Might just blow through that area, man. Today might be a wild day, folks. We got a long weekend coming up. Who wants to step in front of the train in terms of somehow the conversation shifting back to 50 basis points in March? Remember not that long ago when the conversation was maybe they'd go 1 in February and finish in March? Really, the conversation was more that they'd go 1 in February, 1 in March, and probably finish in May. That conversation's over for right now. We'll see if we get more data. The conversation can change, right? It's February 17th. February, 28 days in the month. We're only 11 days away from entering into March. We're going to get February data as well. But boy, it's been like beats across the board, man. I've been talking about it all week. I talked about during the beginning of the program, beginning of the week, maybe Wednesday, I think, maybe Tuesday, Wednesday, talking about how, and many were talking about it, okay, but very difficult to ignore. And the question was asked, it was asked repeatedly, whether it was asked on, Bloomberg, asked within articles written on the Wall Street Journal, saying rates have adjusted, but the market continues to go higher. Well, eventually, I think the market caught up yesterday, folks. And I wonder if today, ahead of a 3-day weekend, to imagine stepping in front of that train at 4,100 when yesterday the conversation began to shift. Now, listen, you had Mestert and who's the other one? Was it Bullard? Yeah. Who yesterday, they are some of the more hawkish members of the Fed, and they do not vote. So that was like the tantalizing headline, right? Let me see if I even have it up here. Yeah, 2 Fed officials open the door to a 50 basis point rate hike. I'm giving you both sides of it, man. But I think the market is mispriced in terms of, even if you take the fact that you had Mestert and Bullard, correct. Yeah, so Loretta Mestert, Cleveland president, James Bullard, St. Louis president, both of them not voting members. Important to note, okay, so not voting members, but both of them talking about 50 basis points on the heels of, folks, right? CPI, PPI, retail sales blowing the number away, 500,000 plus jobs added, weekly initial jobless claims staying under 200,000. It seems like the market was repricing the rates, and we've risen to a price point of almost 4,200 in the S&Ps, and we might get a repricing. We have a 3-day weekend coming up, man. Do you want to position yourself ahead of that with the acceleration we got yesterday, man? And what do we do, folks? Check out the chart. Fibonacci's. You got to love Fibonacci's, folks. Doesn't mean they work all the time, but at least they give you an area. And check it out. That second top at the 618, about 230, even the first one at 1230, right? Right at the 618 of that drop off from where we were at about 3 in the morning. You traded the S&Ps yesterday from 41 to 65 down to 4100. You climb right up to the 618 and boom, you trade lower. We're at 4,079. All we've been doing is chopping around right now. It's going to be an interesting open. I imagine we get moves in both directions today because there's so much volatility up right now. Very difficult to plot out what's going to happen, man. When you have Fed governors talking about 50 basis points, right? You have the market coming to terms with the fact that the Fed is going to be higher for longer. And now you have this kind of hope that somehow all the data we're getting isn't going to be as sticky for inflation as the economy would like. And unfortunately, I just think it's not priced correctly, man. I think the fact these numbers are coming in, you get sticky on a core basis at 5.5%, man, and watch out. Now, we're going to get some friendly comps later in the year when inflation was raging, right? When we were getting numbers, they were 10, 11% in, what was it, June, July, August? I'll have to get them up. But middle, the summer, as things were raging, we're going to be coming into those comps in the next 3 or 4 months. That's going to be friendly comps, okay? But folks, on a month-to-month basis, we're just getting staggering numbers in terms of yesterday's PPI up 0.7% on a monthly basis. You push that out 12 months. Just in the last 30 days, an annualized rate of 8.4%. That's a little bit playing with percentages, okay, when you just multiply by 12 the number you're getting over 30 days, but it might not be misleading because there's volatility in those numbers. But just like there's volatility to the upside, there's volatility sometimes to the downside of a miss, right? And 0.7% on a monthly basis is quite a number on the PPI. Some of it has to translate into the CPI and consumer costs. The other part of it, though, just eats up margins, which is the other part of the conversation in the market right now. So a lofty number like that combined with everything else, yeah, I see some risks in this market, folks. I was talking about it yesterday, and zooming in on where we were yesterday real quick, okay, even towards the end of the program, risk reward wise, and yeah, as the market went up, I said, what am I doing, man? Nothing can hold this market down, right? But don't lose faith, folks. Sometimes it just takes a little bit longer. Now, you got to keep that in mind. That's why you got to use stops, okay? The market, and maybe somebody in the den can help me out in terms of what's the phrase, right? It can remain irrational longer than you stay liquid, or longer than you can hold your position, or whatever it be, right? That is definitely true, 1,000,000%. You got to remember that one all the time. Never think you're smarter than the market, man. No matter how right you think you are, okay? It might take 10 years for the market to figure out what you figured out. 5 years, 2 years, whatever it be. Sometimes 2 weeks is too long, right, to stay in that position. Nonetheless, we sell off, man, and down 20 points to kick things off. We'll see where we go in 15 minutes and 50 seconds from right now. We get the opening bell, and I imagine we're going to get some volatility. We jump around as we come into the first break with the VIX. There's a pop for you, man, pushing 21 from a low of 1850 yesterday. And we jump to the all-important notes and bonds. The 10-year off of the lows, but we're still negative by another 9 ticks right now. You're talking about lower price and higher yield. You got the dollar index, right? Dollar index, 104.25. That's quite a drop-off from where we were, but still well above where we closed yesterday at about 104. Yeah, we'll see if that trend continues, man, with the dollar dropping right now. S&P's down by 20. Stay tuned, folks. We got 15 minutes till the opening bell. We got some earnings. We'll take a look at John Deere trading higher on their numbers this morning when we get back. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got S&Ps down about 21 points right now. You're trading at 4,079. Taking a look at the S&Ps on a daily basis, you're saying, where can we go to right now? I think the first stop's at around 40.50, maybe 40.44. That's a 382 and the entire run higher you've had basically all year. You actually started the year off on January 3rd with a lower day to a dramatic tune in the S&Ps. You charge higher from that level. January 6th is really when they started to accelerate to the high side. You take that point, 382 brings you to about 4,044. And that's taken some of the bodies, not exactly the tails. I like to line up with like the natural high, the natural low, not where it got to for a natural tick. It's an art, not a science, folks. Kind of feel where in that chart you're comfortable putting, where this thing chopped around on the low side in terms of where you were chopping December 19th, basically to January 6th before you took off. So if you're looking for a price target on the bottom of this market today, we're talking about 4,044, maybe one of the first steps. That's also correlating. January 17th, you had a high of about 4,035 before you had that first pullback. So that was an area of resistance. Maybe you turn into an area of support. And you can kind of see we got a little bit of consolidation, you could say, in a span of about 6-7 days as you continue to charge higher above 4,200. But the 382, yeah, you're talking about 35 points, almost a full percent below where we're trading at right now with the S&Ps, making a little bit of a climb to the upside, now down less than 0.5%. NASDAQ 100 down 0.6% right now. Okay, jumping around to what else we have going on. All right, where are we going to kick things off? Let's do it with Deere. As we mentioned, John Deere, earnings double, sales rise on higher production. Farm and construction equipment ups its annual earnings outlook after first quarter sales rose by a third. I'm going to jump to their chart real quick, John Deere. Now, this will not have the action so far. It's been quite a return from where they were in April of 2022. You make it up there in December. Yesterday, we closed at 402, and today we're going to open at, why not, 420, folks. John Deere catching a bid to the tune of about $20. That's about a 5% pop. Now, you jump over This thing was only looking for a one-way expected move about 11. So that's a pretty volatile move to the upside in terms of how, and that is the market maker expected move in either direction when that's pulling that up on the Thinkorswim platform. And as you can see, you jump over. You're talking about yesterday closed at 403. You take a look at where it is, 402.50. Yeah, it seems a little bit more than that, though, as you look at it, right? Closed at 403 about, well, either way, about $7 you would have had to pay for a directional put or call at the market. So you get a $20 move paying for a $7 call, and you got to be right on the direction to make up that immediately. So 50% of the time you're going to lose immediately that $7 because it's not going to trade in your direction. The other 50% of the time you got to hope it trades at least $7, if not more today. John Deere really popping to the upside, up $17 at $420. John Deere. Okay, what else do we have going on in terms of companies? DoorDash. Yeah, they're trading higher as well. Sales rose last quarter as consumers continue to order delivery. People are spending more on food delivery even as prices rise. This one surprised me a bit, to say the least, man, because it's a convenience a lot of the time. Now, they're going to open up $3 higher, and this is a different story, as in they had about a $5 move priced in. Okay, so they're going to only open, about $3, maybe $4 to the upside. We take a look at the 15-minute. There's your action on their earnings. They've given back some of those gains. But, boy, I'd be careful in terms of the convenience factor of this when people are completely aware of rising prices in one area that you can not get squeezed on those rising prices, at least right now, is by not using kind of the gig economy when you don't have to. Because when you add, like, for instance, DoorDash or Instacart, I've talked about it before. Instacart's an amazing service. I used it tremendously during the pandemic, especially when you have a young kid out. You can't exactly, with a newborn, be going to the grocery store all the time. Sometimes that service, very beneficial. As prices have risen, I've used it almost not at all. It's just too much money at the grocery store right now to do that when I'm now in a position with Tommy being more than 2 years old where I just bring him to the grocery store if I want to. It's very easy. We're out of the pandemic as well. It was a cost I was no longer willing to incur for the convenience. And I think DoorDash is probably going to deal with some of that, even if they're not dealing with it right now, man. That's what I was saying that one. Because I've pulled up Uber Eats, DoorDash, and Uber's a great company, man, okay? Taking an Uber is different. I've talked about it than the food delivery. And the world has changed, all right? Delivery, pickup, stuff like that, it's here forever, man. Target, I go to Target. What do they have now? 20 spots with a completely dedicated part of the parking lot. Make many stores. Walmart as well, right? They have an overhang, building their stores for the future. But they are not venture capital funded growth companies anymore that are taking losses. All of these companies are now publicly traded companies that are accountable to profitability more so, right? That's why they try and stay private for as long as they can, because once you get public, you can't just run losses forever. Well, that's the reason why they were able to offer the prices to consumers they were, because they were running on losses like forever. I mean, Uber's what? They're barely getting positive right now. Something like that. That company has been a mainstay for a decade, it feels like, right? If not longer. So what's going to happen? They're going to face some heat, man, in terms of those costs. Because when you're talking about ordering food and you're talking about the food gets multiplied by a 10% hike up sometimes, then you have the fee, then you have the service fee, then you have the convenience fee, then you have the tip on top of it. Sometimes you're paying an extra 40 to 50% for a pickup order that can grow pretty rapidly. So I'd be careful of DoorDash, man. This thing's been quite a run from the bottom. You were at $41. You're going to be at 70 now on the open. And yeah, I would be careful. I'd much rather have exposure to a company like Uber breaking out of that up channel. Doesn't mean it's a buy right now at 36. It's been on quite a run from where it was to start the year at 25. But yeah, Uber's changed the world, man. And they're here to stay. DoorDash is going to face some heat. And Uber is going to be their competitor forever, and DoorDash doesn't have the cash flow that comes with the rest of their business to keep up if they need to. When people are going to question the fees, man, for food delivery, we question it in our house. It just feels like I'm burning money when I can't take a 15-minute ride to go pick up some food because it's just too much money for that service fee. It's just too much. Didn't used to be. Food delivery, yeah. All right, yeah. It's time. Time's the most important, valuable thing you have. right? So talking about, too cheap to bring me some lunch stuff. Yeah, I agree, man. But then you get into it, right? Time is money. And time is there's nothing more important than time, folks. But DoorDash delivery, everybody's usually got about 15 minutes sometimes to pick up the cost, even businesses when you talk about that type of a cost, depending on what you're in. All right, as we got about 4 minutes left to go until the opening bell, you got markets rising a bit. We're basically right where you were at about 2:45 in the morning right now. That price point was 4,083.50. You're at 4,082.50 practically in the S&Ps right now. We got the NASDAQ off 65 points. Let's see how the FANG stocks are coming into the opening bell. Amazon shares marginally in the red right now by a few pennies. Actually, the bid-ask is actually spanning where they closed yesterday. Apple shares held up relatively well until the drop-off yesterday in terms of the last, hour or so. Apple gives it all up. They were dramatically in the positive, actually, at 156. You finish at 153. Apple barely in the red so far this morning. We jump over to Google. Google shares barely in the red. Not bad for the NASDAQ 100 being down almost 70 points. Microsoft shares, quite a day for them yesterday. Yeah, Microsoft, even them, barely in the red. All right, folks, it's going to be an interesting day in the market. Stay tuned. We get the S&Ps down by 18. We're coming back for the opening bell.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open And where's it going to go? We got a little bit lower price, but I imagine the market's going to take a minute or two to sort itself out, man, on this open as we come into a very busy trading day. We got options expiration coming into a long weekend at a time when, folks, I mean, this is the part I want to stress. It's going to be very interesting to see how this market digests, and that's not what I'm talking about. I'm not talking about the, come on, where am I? Oh, shame on me. Did I just click away from it? Here we go. There we go. Okay. So the Journal, just in their normal live updates this morning on one of their live feeds that they're talking about the market. But this is what I talked about at the beginning of the program, folks. And it's going to be amazing if this market just shakes off all of this, okay? Consumer pricing. This is economic data and monetary policy from this week. It says here are some key readouts from a busy week for both macroeconomic and corporate news. Just looking at the macroeconomic numbers, okay? CPI, 6.4% from a year ago. PPI, 6% from a year ago. A huge beat, okay? Initial jobless claims, historically low under 200,000. Retail sales rebounded sharply in January for the largest monthly gain in nearly 2 years. And you had two Federal Reserve policymakers, both pretty hawkish and both non-voting members, yesterday saying they would have backed a bigger rate increase for the February hike. With the data we've gotten since then, it would make sense that 50 is in the conversation. You've already seen the shift in terms of the pricing for the implied odds for the next meeting. I think it was at 29 or 30 basis points, which means that somewhere between 25 and 50, tilted towards 25 right now, but not at 100%, not even close. As in, there is a possibility they go to 50, depending on what happens. And not in this was the non-farm payrolls that we got the prior week, right? Last Friday before that, I believe, 500,000 plus, right? You add on that, man. I am interested to see where we go ahead of a long weekend in the S&Ps. We're trading right now at 4,075. Let's jump to notes and bonds, because they're going to be important as well, folks. We got the 10-year off about 10 ticks, just hanging out where we were. 30 years off about 19 ticks, and let's see how the dollar's doing, because it was pulling back. Yeah, you catch a little bit of a bid off of that 104.25. We're at 104.31 right now on the dollar. All right, I had GM up there. GM, yeah, was it just an interview that they had? Because I was watching some of that interview. I was figuring maybe they had their numbers out. No, maybe it's just an interview with Mary Barra, the CEO. Yeah, I was watching some of this interview last night. It's interesting. She's talking about one of the things she's talking about is that they're fueling all the EV sales that they're doing by pushing out trucks, right? And as that's happening, man, the price of cars. So GM sold just under 40,000 EVs last year, a distant third to Tesla and behind Ford as well. Almost all of GM's plug-in sales were the Chevy Bolt Compact. But that's about to change, man. All right, what else do we have up here? Yeah, how about natural gas? They're talking about natural gas in the den, man. Let's take a look at natural gas. And I would stay away from natural gas, folks, okay? You're at 229. You take a look at this thing on a daily, from $7 in December, and it's not stopping. You're making recent lows in natural gas, and Abu Dhabi now is going to sell 4% of the natural gas business in an IPO. The move comes as the Middle East energy producers are ramping up plans to supply Europe. So the National Energy Company plans to sell a stake of about 4% in its natural gas business in an IPO that it hopes will raise $2 billion, right? Man, oh man, Abu Dhabi will sell more than 3 billion shares, one of the world's largest gas processing entities, on February 23rd. So it's interesting, and the reason I bring it up, that they sell it at this price level, right? I guess it doesn't matter. Or maybe that means that it could face even more woes, because selling at that price level on February 23rd, when the chart of natural gas looks like this, right? I mean, think about selling a 4% stake in a crude oil IPO if this was the chart of crude oil. So that's not a bullish sign, because if they thought that this was a vastly undervalued market right now, and I'm just going off these 2 points alone, right, to pay attention to, because they have a big enough portfolio in Abu Dhabi. You know, maybe that's just a small enough piece of the pie that they're not worried about it to free up some cash for their other ventures. Yeah, and that transitioned well to the Saudi backers. They're in court with the PGA trying to claim immunity because they're a different government. And this one's going to play out forever, man. But they mean business. The Saudis, Abu Dhabi, I think I saw this morning they're going after Manchester United to the tune of $6 billion. And the other article I saw out there is that they're interested in buying a minority stake in an NBA team. So the rules for NBA ownership just changed recently in the last year or two. And the way it changed is that it went from they had to be a passive investor, probably, that they can now be, sovereign wealth funds, a direct investor for a minority stake in an NBA company up to a value of about 20%. Not about, I think that's the value. And the Knicks already have a big relationship. So what you're probably going to see happen is the Saudis, and maybe it's, Abu Dhabi, wealth funds in the Middle East, they're going to be coming in. They're probably going to be buying a piece of the Knicks. Look for it to happen. Now, the NFL, they don't allow that at all. And it's interesting, the hold that those NFL teams have over it, man. I was reading an article this weekend saying that it will probably be the case that eventually they open it up, because that's how it happens, man. There's too much capital, right? It's like keeping the richest investors in the world out of bidding for your property, essentially, is what they're doing. So eventually that's probably going to be too attractive, especially as some of these other offers come in for some of the other teams. You're probably going to see it happen with the Knicks. Speculation completely, but interesting how they are everywhere right now. Live Golf, Manchester United, they're going to be owning big pieces of the Knicks. 20%, man. That is a big piece of the pie to own of especially a franchise like the New York Knicks and Madison Square Garden. All right, what else do we got pulled up here? We talked about DoorDash. We talked about John Deere. We talked about General Motors. Yeah, how about all these wealth hedge fund managers? Now, the one that was interesting, man, I don't know if you saw the story, and maybe they still have it. Was it Bloomberg? I got to pull it up. Talking about the guy that made 193%. Yeah, here we go. Yeah, this is the one, right? Yeah, perfect. Lesser known hedge fund boss joins ranks of best paid. Quite a year last year, man. You pegged last year well, and you are a hedge fund manager that understands leverage. You had quite a year, man, and you probably had some pretty extreme volatility as well. I keep checking on the market, man, because I'm telling you, we're going to see some volatility today in both directions, I imagine, folks. S&P's down 25 points right now. So check this out. Said Saeed Haider, hopefully, his conviction that inflation was about to explode across the globe can be summarized by a single number. This is the leverage. $63 billion. That's how much his Haider Capital Management reported in assets to start 2022. The catch? They just oversaw $1.2 billion. Whoa! Who was loaning them $63 billion of exposure with only $1.2 billion? The copious leverage led to a tumultuous year. 1 month he's up 54%, another he's down 20%, but ultimately 193% return for investors. And yeah, he walked out with quite a big payday, man. He himself, what do you get? $859 million. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, folks, we got markets dipping a bit. We just lost about 10 S&P points from where we were just after the open. Markets right now at 4,071. Remember, we hit about 4,065 twice overnight at about 4 in the morning and about 6:10 this morning. We were at those lows as well. We're trading right now just above that price point. All right, jumping around to what else we have pulled up here. Yeah, this one's interesting just from the perspective of jumping the gun in terms of the impact that AI may possibly have. Because if you've read some of the stories, man, I'm not sure if this is the one that, I'm sure there's many, right, reporters that are talking about it in terms of there's only a select few that have access where you can actually have a chat, like a longer term interaction chat with Microsoft Bing as one of the things that they're offering as part of a beta testing program to a select few right now. Yeah. It threatened some, provided weird and unhelpful advice to some, insisted it was right when wrong. I saw one talking about that it confessed its love and that it was going to try and break up their marriage or something like that. Association with a company like Microsoft on that level, a little bit eerie. And I'm sure there's a few words that could describe, you know, how that and the implications of that. What I would cling on to this is that there is value for what Microsoft has done here, though, because I think people in themselves have realized that the game is actually changing immediately. Our understanding of search and search function in Google is going to change dramatically over the next 5 to 10 years. And just the fact that Microsoft is now in the conversation is a starter. It really is. The fact that I put myself in line to try Bing, right? I think you went to the website to try their new AI, you had to give them an email address or something like that. So they got my email address, which they already have because we have Microsoft 365. But they got me to go to Bing, which I haven't done in a decade. So it does matter, but the tools take a lot, man. I've talked about ChatGPT using their service, talking about just simple option math, right? Multi-leg option trades, trying to take a look at those, etc. One of the things that I was looking at is that simple math or somehow was tripping it up. Okay, simple math in a word problem-like style. Excuse me, that's one of the things I anticipated that maybe a computer could solve pretty quickly in terms of AI versus the nuance of feelings, emotion, tone, all of that stuff. That's almost impossible from my understanding of how that works. S&P's off 29 right now. Excuse me. Today could get ugly, man. 4,050 totally in play. That's where I would look to in the first stop, man. And as I said, you're talking about a 382 of that area. You're talking about right near the highs on January 23rd, 56. We're trading at 4,067 right now, continuing to drop with the S&Ps off about 0.8%. Look, if you look where rates were versus where we are now, you can see a dramatic repricing today, man. I talked about it yesterday. We're off another 0.8% right now, and we're still at pretty lofty levels, man. We're just back to where we were on February 10th, folks. Right? We're just back to where we were on February 1st. We still have all of January's gains. Keep it in mind when you think of where we can go. NASDAQ 100, man, you're off 1.2% right now. Jump around to some of the triples, right? You jump around to the Pro shares. Which one's this? This one's the Ultra Pro Short QQQ. Yeah, you talk about a jump, man. These things are going to move with the S&P's down 34, NASDAQ 100 now off 152. You're seeing that thing jump from 34 to almost 37 right now as this market is picking up some steam, folks. Watch out. We're at the lows of 3:30 in the morning right now. Let's jump around to see how we're trading on some of the commodities. We got crude continuing to drop right now. We got gold. We're going to jump to the gold to the dollar next. Gold at 18.33 right now. We seeing some action in notes and bonds? Not really. Market just accelerating without notes and bonds. Let's see if we're seeing some action in the dollar, though. A little action. Not even close to where we were, though, at 7 in the morning. So the market is pushing lows that we were at. Meanwhile, the dollar index has pulled back a little bit from those lows. It's going to be a seesaw day. We're going to get action in both directions, man. I imagine we're going to see, though, at least about 10 points lower in this market at some point. Seems pretty natural that this thing trades back to a 382 of the move that we've had in light of the economic data and the change that we've seen in terms of rates, yields, etc. Right? Right. Why not? Okay, let's talk about rates. 10-year yield hits the highest level since November. Right? What's the market doing, man? What's the market doing? Let's see where we're at right now. What are we at right now on the 10-year? Are we pushing almost 4%? Where are we at? Come on. Come on, CNBC. 3.88, excuse me, 3.88. And as you can see, folks, okay, I looked at this yesterday, had it up on the program. We're back to where we were for the 10-year at the beginning of the year. And meanwhile, we have the S&P up from about 3850, even call it 3900, right? You're sitting up 160 points. You're sitting up at least 4% from where we were at that time. And meanwhile, yields are basically going back. Everything that what about the whole conversation that we traded from 3850 to 4200, right? Now, let's go a little bit big picture because we haven't done this big picture in a while. I'm going to put an S&P on a 3 weekly. Okay, I'm going to take the low of 2174. I'm going to run it all the way up to the high of 4800. We made it to the 50% back there in October. Pretty remarkable it's been that long, man. What are we talking about? October, November, December, January, February, almost 5 months. Remarkable, man. We just had a nice double top, though, folks, right? December 12th, 4180. We just got to 4208. And where's the 618 on this chart, folks? About 3200. It's still possible. That's 20% down from where we're at right now with quite a start to the year. And you're only talking about 300 points below where we were at on October 10th. And I think that was kind of just a spike, right? Yeah, October 10th was just a spike, even if you call it. Almost 3,600 was kind of the rational low that the market chopped around at in October. It was right near where it was in June as well. It's been quite a run up to higher prices, man. But you're dealing with levels right now that are a little lofty compared to where yields are. When you look at where yields are, I don't think the market has completely disassociated the yields much. And I think they're going to come to terms with that. And I think they're struggling right now to come to terms with that today because there was an insistence almost as the data kept creeping, right? As we got 500,000 jobs added. Said, okay, we're still going to get inflation under control, right? We got a hot CPI. Said, okay, well, it's still decelerating, just not as much as we thought. We're just used to getting under 200 initial jobless claims, 200,000 initial jobless claims now. So weekly jobless claims come in at 190,000 on the regular. We get retail sales up 3%. Said, I guess it's okay because retail sales are strong, the economy's strong, CPI is still going down, just not as much as we thought. And then you get what? And then you get Fed speak of 50 basis points. On top of you get a PPI number, which is just mammothly 0.7% versus 0.4%. And I've talked about it, folks, but you got to keep it in your mind, man, because we got a 3-day weekend coming up, and we got the S&Ps at almost 4,100, and we have a PPI that came in at 0.7% for the month yesterday. You multiply that times 12, you're dealing with 8.4%, okay, versus the market thought it was going to come in at 0.4%. Multiply that times 12, you got 4.8%. So in one aspect, and there's a lot of variance, man. I'm not out here saying crazy things like that means that we're dealing with right now. There's a lot of variance, and understanding variance, folks, is a very difficult thing, especially in volatile markets, okay? Just how much things can vary from the mean until it kind of meanders back, and the sample size that you might need to get an accurate representation of the data. Well, that's a big number, 8.4 versus 4.8. And those are the two differences that we got yesterday at the producer level. Some of that's coming to the consumer level. One more segment, folks. As Dudette says in the den, new low in the SPX, down 36 points. Stay tuned, folks. One more segment. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks, and watch out below, man. We got the S&Ps off more than a full percent right now. NASDAQ off 1.5 approaching. It's a straight drop off the opening bell, folks, for the last 25 minutes or so. We got the Dow off 182 right now. The Russell off about 15. But, yeah, we just broke 4,060, man. I was talking about 4,050. Today might be a tough one, folks. Be careful out there, because all the things I've been talking about, seems like the market figured that out the moment we got a little Fed speak, even if it's from two of the most hawkish members that are non-voting members. Okay, they're aware of their words. They're aware of what's going to happen when it's 50 basis points. But guess what? They're also aware of the data, man, that the market's not able to deny anymore. And I don't think the Fed is. And Chairman Powell doesn't want to be the guy, man, that's pausing on a Fed cycle. I mean, any high schooler can write a story about a Fed mistake when they're thinking about pausing with CPI numbers at 6%, PPI at 6.4, whatever they are. Pretty close to those numbers, right? We'll see, folks. S&P is off 1% right now. And how about China? You want to talk about the wild, wild west, man. China Renaissance shares plunged more than 20% after it says its founder, Bao Fan, I was not familiar with this gentleman until yesterday. Pretty amazing gentleman in terms of what he's doing, the deals he's put together over there, the company he built with Renaissance. But yeah, he's gone. And they can't reach him. And his family says the government says he's helping with an investigation, which is basically what they say when the cops come and scoop you up and they don't let you talk to anybody. So be careful over in China if you're investing at all. I mean, it's amazing if they have that kind of money, man, how they don't try and get out of there. You know, I mean, you've seen some of the Russian oligarchs, some select couple, right, kind of decouple from Putin and Russia. I'm surprised more Chinese don't do the same when you see somebody like that. That company is probably nothing without him, from what I've just read in the last 24 hours or so about that gentleman, man. Probably nothing without him. And now he's gone, and they can't reach him. And that company dropping. S&P is dropping, folks. We're basically at session lows right now. S&P's off 42. Our man Basil Chapman did his program, folks, at 8 in the morning. We're going to play that right now. So he saw the market when it was lower. Have a great long weekend. Be safe, folks. No drunk driving. Take an Uber if you're having too much fun, man. Life is too beautiful. We'll see you back here Tuesday morning. Stay tuned, folks. Live programming after Basil. Have a great Friday, everybody. Have a great weekend.